Hey friends, after a long rally of more than 125% since COVID crash in March 20, Nifty has now corrected almost 1500 points from the highs of 18,500 to current levels of 17,000 with almost 8% correction. In fact, on Friday itself, Nifty cracked 2.91% with a fall of 509 points. Now this has certainly triggered a panic button among investors, especially among the new investors that have recently entered into the market. Let's be honest, nobody likes to see their portfolio in red. So in this video, we'll quickly look at the major reason for the fall in the stock market, then we'll discuss what should be the right investment strategy in a falling market. Alright, let's get started. Now if you look at the Indian stock market, there's a correction in every sector. Nifty has corrected 8% from its peak. Now this correction is not only in Indian market. This correction has happened globally. On Friday, Nasdaq tanked 2.23%. European market tanked even badly. UK stock market tanked 3.64% on Friday. French stock market has tanked 4.75%. German stock market has tanked 4.15%. Even the entire Asian market was down on Friday. One of the major reasons for this global sell-off is due to new COVID strain that has been identified in South Africa. So there is again a fear of global economies shutting down due to this new strain, and people expect that the new COVID mutant could pose a bigger risk than the Delta variant. Now Indian market were already under pressure due to foreign institutional investors continuously selling their investment in India. We have already discussed before about the role of inflation and how US Fed interest rate impact the inflow or outflow of money from Indian market by FIIs. Just like India is facing the inflation problem, this is the same problem in the US. The inflation in the US has increased a lot after the economy has opened up post-COVID. Now the US Fed has already started to taper down the bond buying program, and recently the US Fed had a meeting to discuss the inflation, and officials have shown concern over this high inflation rate, and officials said that they would be willing to raise interest rate sooner than participants currently anticipated. When the US Fed would increase the interest rate, it would suck out the liquidity from the market. Moreover, the 10-year bond yield in the US has also started to increase. Due to this, the FIIs are continuously selling their investment from the Indian market. In April, they sold investment worth 12,039 crore. In May, they sold investment worth 6,015 crore. In July, they sold investment worth 23,193 crore. In October, they sold investment worth 25,472 crore. But November has seen the highest selling so far, with investment worth 31,124 crore being sold till now. In fact, on Friday, FII sold investment worth 5,785 crore in a single day. Although DII did try to support the market and have been consistently buying in last few months. In April, DII's purchased investment worth 11,359 crore. In June, they made an investment of 7,043 crore. In July, the investment was 18,393 crore. In fact, in November, the investment was 20,598 crore. But still, the sellings are much more than the buying. So due to this, Indian markets have seen some correction. Now the next question is, what can you expect from here? After the big fall on Friday, there is clearly a negative sentiment in the market, and looks like market is now in bear grip. So I expect that there can be further correction of around 5 to 10% from here. The reason being that in the short term, market is driven by sentiment. So when there is a correction, it creates a panic, and that further triggers the selling. Now there are a lot of traders that have entered into the stock market with borrowed money. Especially the futures and option traders invest on leverage due to high greed. And when the market corrects, they are under pressure to sell their holdings. This creates a snowball effect in the market. So I expect a further downside of around 5 to 10% in the market in the short term. Now the most important question, what should you do in this kind of market? Should you buy, sell, or hold your investment? So there are two types of people in the stock market. One is trader and another is investor. If you are a trader, then this fall would create panic. However, if you are an investor, then this fall can be the biggest opportunity to invest in quality stocks at a good price. Just ask yourself, is it the first time the market has fallen due to COVID? No, we have seen the worst phases in the past and we have seen various COVID variants. Yes, when COVID hit the world for the first time, everyone was caught off guard. But today, every government and every organization is prepared to handle COVID. So I don't expect serious damage in the economy due to this variant. I think the current crash in the global market is a classic case of panic selling. Now, as far as Nifty 50 valuation is concerned, after the Friday fall, where Nifty touched the level of 17,000, its P ratio has touched the level of 23.49. Does this P of 23.49 looks overvalued? Not at all. In fact, the market is looking very attractive at current valuation. Any further fall would make the market more attractive for long-term investors. So if you are a long-term investor that invests via mutual fund, then take this opportunity to buy more on dips. You can even consider investing in entire Nifty 50 via index fund or ETFs like Nifty Bees. And please don't make the mistake of stopping your SIPs. If you are a stock investor, then you can consider investing in blue chip stocks on every dip. One of the strategy could be to break your investment in 4-5 parts and keep investing on every major dip. Now obviously, everyone wants to buy at the lowest level, but we can't time the market. So we don't know how much the market will correct from here. Better strategy would be to invest in parts. As far as individual sectors are concerned, banking sector has corrected more than 12% from its peak. So the banking sector is looking very attractive. Even the specialty chemical sector is looking very attractive after a correction of almost 30 to 35% from its peak. I remember when Nifty crossed the level of 18,000, many people regretted not investing when it was at much lower levels. Today, Nifty is 1500 points down from its peak of 18,500. It is a great opportunity to invest your money. Nifty is currently trading at a PE of 23.49, which is looking very attractive. I recently created a video on 5 psychological barriers to create wealth in stock market, where I discussed about the lack of patience and discipline as one of the major barriers in wealth creation. Trust me friends, in the long term, it is the patience that will separate the winners from the losers in the stock market. Just look at the long-term prospect and fundamentals of the economy that are still intact. I have been optimistic about India's growth journey and utilizing every dip as an opportunity to buy good stocks for wealth creation in the long term. What is your take on the current state? Are you buying or selling? Let me know in the comments. I hope you'll find this video helpful. I'll see you next week. Till then, take care.